Hello, I'm Sebastian. Welcome to 9 Trees podcast. Today, I will summarize and review the book. Day Trading QuickStart Guide by Troy Noonan is an entry-level roadmap to the fast-paced world of intraday trading, written for readers who want structure before risking real money. Positioned as part of the QuickStart Guide series, the book focuses on simplifying the core skills that separate hopeful speculators from disciplined operators, understanding how markets move, selecting liquid instruments, building repeatable trade plans, and managing risk with consistency. Rather than treating day trading as a shortcut to wealth, it frames success as the product of preparation, process, and emotional control. Readers are introduced to the language of charts, common setups, and the logic behind entries and exits, while also learning how fees, slippage, and leverage can quietly change outcomes. The emphasis stays practical and beginner-friendly, making it suitable for those moving from curiosity to a structured practice routine. It also encourages realistic expectations and a gradual approach to skill building. I will give you key takeaways from this book. Firstly, day trading foundations and market mechanics. A core theme is building a grounded understanding of what day trading is and what it is not. The book emphasizes that day trading is a business-like activity built on probabilities, not predictions. It typically explains how prices are formed through supply and demand, why liquidity matters, and how volatility creates opportunity while also increasing risk. Beginners often underestimate the role of market structure, so the guide highlights practical realities such as bid and ask spreads, order routing, slippage, and how news or earnings can change intraday behavior. It also distinguishes common venues and products that day traders consider, including stocks and exchange-traded funds, and may touch on differences in behavior across instruments like forex and futures at a conceptual level. Another important aspect is setting expectations around time commitment, learning curve, and the way small errors can compound when trading frequently. By starting with mechanics and constraints, the book aims to prevent the most common early mistake, treating a complex performance skill like a simple money hack. This foundation helps readers evaluate whether the day trading lifestyle, pace, and stress level fit their temperament before they commit serious capital. Secondly, technical analysis basics. For intraday decision-making, the guide typically introduces chart-based tools in a simplified way, focusing on what a beginner needs to read intraday price action without getting lost in indicator overload. It explains common chart types and timeframes, and why a day trader might monitor multiple time horizons to align short-term entries with broader context. Key building blocks include trend identification, support and resistance, breakout and pullback logic, and the use of volume as a confirmation tool. The book also helps readers understand candles and basic patterns as a language describing momentum, indecision, and reversals, while cautioning that no single pattern is a guarantee. Indicators are usually presented as supportive rather than magical, with attention to how moving averages, relative strength style measures, or volatility bands can help create rules for entries and exits. Importantly, the book connects analysis to execution by translating chart observations into if-then plans. That shift from looking at charts to designing decisions is central to becoming consistent. By keeping the toolset focused, it encourages beginners to practice one or two approaches deeply, reducing the tendency to jump between strategies after a few losses. Thirdly, winning trade plans and repeatable setups. A major value of beginner-focused trading books is teaching readers how to turn ideas into a plan that can be repeated, tracked, and improved. This guide emphasizes creating a trade plan with defined criteria for market selection, timing, entry triggers, stop placement, profit targets, and conditions for exiting early. It reinforces that a setup is not merely a chart picture, but a complete scenario, context, catalyst or alignment, confirmation, and risk definition. The book often discusses the concept of edge, meaning a small statistical advantage that becomes meaningful only through disciplined repetition and controlled risk. It also encourages pre-market preparation, including watchlist building, identifying key levels, and planning responses to likely outcomes rather than reacting emotionally. Another practical component is learning how to avoid overtrading by limiting the number of trades and focusing only on the best opportunities that match the plan. By treating trading like a process of testing and refinement, readers are guided toward a professional mindset, follow a written plan, execute consistently, review results, and adjust rules based on evidence rather than impulse. Fourthly, risk management, position sizing, and protecting capital. Risk management is presented as the skill that keeps a trader in the game long enough to learn. The book emphasizes controlling downside through position sizing, stop-loss discipline, and a clear definition of maximum risk per trade and per day. It explains why a trader can be right about direction and still lose money if entries are poor, exits are inconsistent, or size is too large relative to volatility. Concepts like risk to reward, win rate, and expectancy are introduced to show how profitability is a function of the whole system rather than any single trade. The guide also highlights common hidden drains such as commissions, spreads, and slippage, which matter more for high-frequency styles. Readers are encouraged to plan for losing streaks, limit leverage, and avoid revenge trading, since emotional decisions often lead to oversized positions and cascading losses. Another recurring point is that small, consistent risk allows for learning and iteration. By prioritizing capital preservation, the book helps beginners shift from the excitement of big wins to the stability of survivable losses, which is essential for long-term development. Lastly, trading psychology, discipline, and continuous improvement beyond charts and tactics, the guide underscores that day trading performance is strongly shaped by psychology. It addresses fear and greed as predictable forces that distort decision-making, leading to late entries, early exits, or refusal to take a planned loss. The book encourages a rules-based approach to reduce emotional noise, such as using checklists, predefined alerts, and strict daily loss limits. It also discusses how overconfidence after wins and despair after losses can both trigger impulsive behavior, making consistency difficult. A practical antidote is a structured review process, journaling trades, recording the reasoning behind entries and exits, and tracking whether outcomes came from following the plan or breaking it. This supports deliberate practice where the goal is to improve execution quality rather than chase short-term profit. The guide often recommends starting in a simulated environment and moving to small size, allowing psychological skills to develop gradually. It frames discipline as a trainable habit built through routine, preparation, and honest self-auditing. By linking mindset to measurable behaviors, it helps readers build resilience and a method for steady improvement. In conclusion, this book is best for complete beginners who want a clear path into day trading without getting buried in jargon, as well as intermediate traders who have tried trading casually and realized they need a structured plan, defined risk limits, and a repeatable routine. It can benefit a reader's life by introducing disciplined decision-making, probability thinking, and process-first habits that extend beyond markets into budgeting, goal setting, and emotional regulation under pressure. For aspiring traders, the practical payoff is learning how to approach trading like a business, selecting the right opportunities, controlling risk, and evaluating performance through journals and metrics instead of feelings. Compared to many trading titles that either oversell quick riches or dive too deep into technical theory, this guide stands out by emphasizing a simplified, actionable framework aimed at helping readers build competent basics and avoid common early mistakes. It is worth buying if you want an organized starter blueprint that integrates market mechanics, trade planning, risk management, and psychology into one beginner-friendly progression. Used alongside deliberate practice, it can help readers develop the mindset and structure needed for sustainable improvement. If you would like to support Troy Noonan, you can buy the book through the Amazon link I've provided in the podcast description. After reading the book, please let me know what you think and share your thoughts. See you around.